Now, US markets ended a 4-week losing streak on Friday, closing slightly higher after a volatile session driven by options, expirations and trade policy developments. The S&P 500 rose 0.08% on the day and 0.5% for the week, while the Nasdaq gained 0.52% on Friday, adding 0.2% weekly. The Dow advanced 0.08% on Friday, posting a 1.2% weekly rise. Stocks recovered from session lows after comments from Donald Trump suggested some flexibility on upcoming tariffs. European markets closed lower, weighed down by weakness in the travel sector after the closure of London's Heathrow Airport. The pan-European stock 600 declined 0.6%, with the CAC 40 and the FTSE 100 down by similar margins. Germany's DAX lost 0.5%. Travel and leisure stocks fell 1.6%, with airline stocks under pressure. Asian markets saw mixed performance, with Hong Kong's Hang Seng Index falling 2.19% and China's CSI 300 down 1.52%. Japan's Nikkei 225 lost 0.2%, while the Topix gained 0.29% to extend its winning streak to 7 sessions. South Korea's Kospi added 0.23% for a 5-day rally, though the small cap Kosdaq slipped 0.79%. Indian markets rose more than 4% and recorded their best winning week in 4 years. Crude oil prices were supported by a new OPEC Plus plan for additional supply cuts, with 7 members agreeing to trim output further to offset prior overproduction. These reductions, set to last until mid-2026, will counterbalance upcoming production increases. This plan follows Washington's latest round of sanctions targeting Iranian crude oil shipments, which analysts expect could reduce exports by around 1 million barrels per day. Gold fell 1% on Friday, retreating from record highs as US dollar strengthened. However, the metal still posted its third consecutive weekly gain, up 0.7%. Spot gold settled at $3,014 an ounce, as US gold features at $3,021. Investors remain focused on geopolitical risks and potential Federal Reserve rate cuts, which markets are pricing in for July. Now, looking ahead, traders will be watching global central banks' comments, trade policy developments and further signals from the Federal Reserve on the timing of these rate cuts as well. All right, and for more on this, we're now being joined by Mr. Amrish Baliga. He is an independent market analyst joining us from Mumbai. Thank you so much for joining us on World Business Watch.
Good morning, and thank you for having me.
So, what do you reckon are the factors helping Indian markets record their best week in years?
Yes, I think it was the best weekly gain in the last 4 years, and basically the markets had corrected very well in the last 5 to 6 months. From a peak of the Nifty of about 26,277, we had witnessed a 15 to 16% sort of a fall, especially a decent sharp correction in February and early March when Nifty came down to about 22,000 levels. And the valuations had become attractive. And that's when we saw value buyers and smart investors starting to make fresh purchases. And along with that, lately we have seen FIIs, who were sellers for a very long time, have suddenly turned buyers. I mean, if you look at the net short positions of FIIs in F&O, I mean, that's come down very sharply. And when there's upward momentum starts, I mean, you have a lot of traders who jump onto the bandwagon. And overall, if you see, there are no adverse domestic economic or political news, which is considered good by the markets. So expect this momentum to continue for a while longer, maybe the next few days. But frankly, I don't see this as a fresh rally. I think it's more of a bounce back as of now.
All right, sir. So that being said, is this rally set up for a possible fall on tariff deadlines then?
Yes, I think that's the next big challenge for the markets. I mean, though the market participants are expecting that there will be some understanding between India and US as the trade delegation is expected in India next week. Also expecting some deferment or dilution of tariffs, knowing President Trump's volatile nature. But in case there's no change and we get into an era of tariff wars, we could see another good correction. But I mean, the fear is that these tariff policies can affect a number of supply chains, and that could have an adverse effect on the corporate performance.
All right, and just for better understanding, would you say that the RBI is ready to cut rates in April now? Is that why banking and some other consumption-related stocks are going up now?
See, slower than expected inflation, I think that's clearly opened the doors for a 25 bips cut in the repo rates. So that's what I expect. And this could be one of the reasons, like I rightly said, for the banking and consumption stocks to move up. Also, it's expected that with more cash in hand in the next financial year, due to the tax cuts which we had in the budget, we could see the consumption improving. And also, the 8th Pay Commission is expected to increase the disposable income for the government employees. So this could be the other reason for the consumption stocks to move up.
All right, so where do you see the Sensex and Nifty trading after the 2nd of April, perhaps?
No, like I said, I don't see the Nifty much higher than here. Possibly, we could see a band of 23,000 to 23,500 to 23,800. I think this band may not get broken. And like I said, in case we end up with no understanding on the tariffs as of April 2nd, we could again see Nifty back at 22,000 or possibly a bit below that.
All right, Mr. Baliga, it's always a pleasure to have you on the show with us. Thank you so much for joining us.
Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.